Headline indices opened largely in the red but are recovering from the opening lows. The Sensex and the Nifty are currently modestly lower, led by financials. The broader markets, though, continue to recover.
Automakers under pressure on growth concerns as the SAIM predicts 1 to 2% passenger vehicle sales growth in FY26. M&M, Maruti, Hyundai, all of them see losses. M&M, though, recovers from the lows.
Just Dial surged as much as 8% but is off the highs after Nuvama upgraded the stock to a buy from its hold rating earlier. The brokerage has set a price target of 1140 rupees, citing compelling valuations.
India Glycols wins a 1,200 crore rupee order to supply ethanol to oil marketing companies. The stock opens with a gap of almost 2%, but even up some gains, still holding with 1%.
And Tata Technologies and Ireda will enter the F&O segment from March. Both the stocks trading in the green of about 1 to 2%.
Hello and welcome. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalab Malu. With me today is Hormaz Fatakia. Hormaz, you're back after a holiday. Good to see with you coming back. What's also come back is the mid-cap index. The mid-cap index was doing well in yesterday's trading session. We had all the reasons of a gap down today. The gap down happened, but from there we've seen a recovery. Not so much in the frontline indices. Yes, there has been some recovery, but the mid-caps, they've actually roared back once again, telling you that there is, downside protection for our indices itself. The auto stocks, for instance, opened lower. From there, they've seen purchase. The Nifty bank is under a wee bit of pressure, but that's understandable. The mid-cap index doing well is something that the street would take heart from.
Indeed, they would. And Mangal, thanks a lot for that as well. Because, the mid-cap index, the sell-off that we have seen in the broader markets has been the more prominent one as well compared to the headline index. But 22,800, that level still continues to hold on for the Nifty. That has been the story of the last 5, 6, 7 trading sessions on the index. It's held on today as well. It'll be interesting to see how the second half of the trade progresses, considering it's also the weekly options expiry for the Nifty. So the index is something that we'll keep an eye out for, but it's the broader markets that are taking the spotlight in today's session, considering they are the ones that are outperforming. The mid-cap index is up 0.5%. The small-cap index is up 0.6% as well. And there are a lot of other stock-specific movers as well, which we would talk about later as the show goes by. But what are the charts indicating as of now? Sachitanand Uttekar of Trade Bulls is joining in to answer just that. Sachitanand, good morning. Thank you for joining in. Now, is 22,800 now a decisive base that the index has formed? What's your call there? And couple that up with your stock recommendations as well this morning.
Good morning, Hormuz. Good morning, Mangalam. Well, the trend remains weak. In fact, we are of the opinion that unless we don't see the Nifty, trending comfortably above that 23,040 mark, it's a good strategy to utilize bounce backs to create fresh short positions. So even if you look at today's data set, it is clearly evident that the 5-day exponential moving average resistance will be crucial, which is placed somewhere close to around 22,920 when it comes to the Nifty spot levels. I think that will be an ideal zone wherein fresh shorts should be considered. And on the lower side, we may see a swing towards 22,740. But eventually, our broad view on the market still remains weak. We are of the opinion that this 22,800 mark may not hold, and eventually we may see a slide towards 22,500. When we look at Nifty Bank as well, for the day at least 49,400 looks like a resistance zone. Probably, a pullback towards there can be seen in the first half, but I think that resistance may hold on for this particular day. And eventually, even here, we are looking at a support somewhere close to around 48,800. So it's a sell on rise mode for the Nifty and the Nifty Bank as well. So the major trend remains weak unless we don't see a decisive closing about that 23,040 mark. The chances of a trend reversal remains weak. On the stocks front, there are two stocks which are on our radar. Both are from the same company. The one on the short side is Bajaj Finance, which we have also recommended to our clients. Now, after a good strong rally for the last couple of trading sessions, we have seen some signs of distribution profit booking here. If you look at the 30 minutes charts, the stock has given a breakdown from a rising channel, rising wedge formation, which is indicating a pullback towards 8180, where its 20-day exponential moving average is placed. Hence, we are recommending building fresh short positions in Bajaj Finance, keeping a stop loss at 8450. We are expecting a move towards 8180 on the lower side. And on the positive side, it is Bajaj Auto, which has started displaying some steady price action. If you look at last three trading sessions, the stock seems to have formed a base somewhere close to around 8500. We are expecting a pullback rally towards 8840, 8900. And hence, we are recommending building long positions here, keeping a stop loss at 8520 on a closing basis.
All right, Sachi, thank you so much for joining in. 2340 to 2350 is the mark that we've been highlighting, as well as a lot of call writers are active at the 23,000 mark itself on the Nifty, though there has been some recovery in a bunch of these broader market names. Pull up something like a CG Power, that's moved to the high point of trade, recovered about 3.5% from lows. Mid-cap index is at the high point itself. APL Apollo Tubes is the one that is also surging as we speak. So in this market, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. And today we have Neha Dave joining in.
Today's stock idea is CHEMS, which is the largest registrar and transfer agent for mutual fund industry. The stock has corrected more than 35% from its peak price despite reporting robust earnings in Q3 FY25. The broader market correction is one of the reasons for the fall in the stock price. But most importantly, the street is concerned that the current equity slump could lead to mark-to-market loss and interrupt with the fast-paced growth of assets in the mutual fund industry. Moreover, the inflows into mutual funds could moderate in the near term. So the key question is then, why consider CHEMS that draws more than 85% of its revenue from mutual fund? The first reason is the valuation. The valuation of the company has moderated and the stock is currently trading at around 32 times earnings estimated for FY26, which is lower than the average valuation multiple of 40 times the stock has enjoyed since its listing in October 2020. The second reason is the company's market share. CHEMS has a market share of 68% in terms of mutual fund assets serviced and would be clear beneficiary in the long run despite intermittent period of volatility. In addition to that, there are high entry barriers to the business and there is very less risk to the existing market share, which is the real mode of the business. The other business strength includes cash-rich balance sheet and annuity-like revenue. The company also enjoys high operating leverage and has delivered robust return ratios, that is return on equity of about 30% in the past 5 years. While the mark-to-market risk exists in the near term, the business moat outweighs the short-term concerns. Investors should consider this stock for the long term.
Interesting stock idea there with CAMS. By the way, Mangalam just mentioned two names from the broader markets that had surged to the highs of the day. A couple of them have also come off the highs of the day, one of which is Netweb Technologies. That stock was up almost 8% earlier in the trading session. That has come off the highs of the day. Remember, the stock was in a 10% upper circuit yesterday. It's given up most of those gains, still holding on to gains of around 3%. And the other one is Just Dial. We highlighted it in the headline as well with the Nuama upgrade. That stock too was up around 8%. And that too has given up most of those gains and is now holding on to a green tick of around about 3% as well. We'll take a short break here on Chartbusters. On the other side, we'll be in conversation with Avinash Godkhindi, who is the Managing Director and CEO of Zaggle Prepaid, on their new tie-up with Reddington. Stay tuned, we'll be back on the other side. Back with us here on Chartbusters in conversation with the management of Zaggle Prepaid, who has tied up with Reddington to provide low-cost technology solutions for enterprises. Now, the company had also told CNBC-TV18 earlier that more acquisitions could be in the pipeline. Now, to tell us more about the tie-up, the likely acquisitions, and of course, the road ahead for the business, we are being joined by Avinash Godkhindi, who is the Managing Director and CEO of Zaggle. Avinash, good morning. Thank you for joining in. We'll get to the acquisitions in just a bit, but to a tie-up with Reddington, what is the kind of scope that this tie-up offers for your business? If you could tell us more on that first up.
Good morning, and it's a great partnership for us with Google, enabled by Reddington, who are their master supplier. Basically, these are devices, Google devices that large enterprises offer for their employees on a company leasing model, right? And the savings for employees could be like 30% upwards, right? So it's very significant savings for employees. From an employer perspective, you're giving a great value, a great product to your employee. Any additional security features that you want to deploy on the phone, a Google Pixel, as corporate policy, you can go ahead and apply that to secure your devices. Given the amount of frauds and amount of spam calls that people get, that's a very critical piece, especially for our target segment, which is the large enterprises, right, that we work with. So this is a great value prop, and a whole host of companies are very interested in availing of this facility and this benefit.
Would you be able to put a value to this order, because it's a 5-year deal that you have with Google/Redington?
Margins,
how much?
Yeah, margins in this for us are very healthy, right? They're very sweet, and that really enthuses us. Our job is to provide the platform, the software, where the employee is able to see how many months of installments she needs to still pay, how much has been paid out, for the corporate to have a dashboard to see. Let's say they have 10,000 employees and they've given this for 1,000 employees. They can see how many of them are in which stage.
Right. No, we understand the product proposition, and obviously we're not the target audience for that product proposition as well. But the target audience is your investors. They want to know, in the 5 years that you are dealing with them, what is the kind of annual revenue potential here? And when you say margins are sweet, what do you mean? Are they 14 to 16%, 15%? A little more than that, because you've guided for the 15 to 16% EBITDA mark itself.
That's an EBITDA on the revenue that we're talking of here in 4 years' time. And too early for us to estimate. This is an innovation, right? Too early for us to give you a concrete number that this is the amount of revenue that we're going to generate out of this. But what we focus on is this value proposition meaningful for our target group? Like, for example, the branch recurring operating monthly expenses module that we've created within Zoyer, which is for your utility bills, your rentals, your petty cash, and the uptake has been phenomenal. We've given a bunch of names to the street, like a Zepto, like a Blinkit, like a Big Basket, Dr. Batra's, Subway, Berkowitz, a very large retail chain with tens of thousands of stores. They've requested us not to name them, but they're one of the largest in the country, if not the largest. And you can imagine the kind of uptake that we see in this in the coming years, right? So we are looking at places where there are significant margins, where there's a deep pull, and where the market size is very large. And these are unique opportunities that come to us given our scale and our market leadership in spend management.
So what are the opportunities that you're looking for, Avinash? Because you had earlier mentioned that you're on the lookout for acquisitions. Have you zeroed in on something? Are you in talks with some potential buyers? What is the progress on that front?
Progress is very good, extremely good. We are in talks, and some of these conversations are in very advanced stages with due diligences, etc., going through. And, we will keep you updated as and when we have an announcement to make, but hopefully pretty soon.
By when do we expect an announcement? Very soon. How soon is too soon, Avinash?
These things have their own course of time. I don't want to tie myself into knots by giving you a concrete time frame, but we are very much on track.
All right. What about, the growth outlook from here on? You have spoken about your revenue guidance at 58 to 63%, your EBITDA margin guidance at 15 to 16% over the next 4 years. And from the time you spoke to us, post your third quarter numbers to now, which is not a very long time ago, stock has seen a cut from over 500 rupees to under 400 rupees. We saw the promoters pick up some stake, 0.04% in the last few trading sessions. Just wondering if promoters are likely to buy a little more. And is there any large institutional investor who is exiting, which is causing this sort of massive decline in the stock price?
So lots of questions. So I will answer them one by one. One, the business is doing great. Two, our actions speak for themselves. The promoters have bought shares. I have bought shares. Dr. Raj has bought shares. And it's a lot more than that. It's about 3 lakh plus shares that we bought. So it's a lot more than 0.04. So our actions speak for themselves. We believe this is a great price to buy. And with regards to institutional investors, look, to the best of our knowledge, what we see, nobody has really exited. It's a lot of other folks, but not the institutional, both domestic and international, in any meaningful quantity or amount.
By other folks, you mean some HNIs? Because this kind of stock price movement happens only if someone with a large holding sells.
Not really. It's individuals that we are seeing, right? They could be HNIs. It's very hard to say who's actually done this, and we don't focus too much of our attention on these things, to be very honest, because we are focused on building long-term value, right? We can't control the short-term stock movements. We can't control the long-term stock movements also. Our job is to build value for our investors, and we truly believe that the markets, especially the Indian markets, will reward great performance over a period of time. And that's the belief that we are operating on.
You said you've bought over 3 lakh shares, Avinash, you along with the promoters as well. Do you plan on buying more? That's a question you can answer for.
No, we both Dr. Raj, who's the founder and executive chairman, and I are co-promoters, and we both bought. I bought a little bit. He's bought a lot more, but there's a promoter group overall that we're talking of here, and in the promoter group, we have a lot of belief in the company, and that's shown by our actions.
You briefly spoke about Zoyer and Brom. Brom was highlighted as a key product, some marquee clients that you're talking about as well. From a revenue standpoint, how much does it contribute right now, and how much is it likely to scale up to over the next couple of years? If you could give us a sense before we let you go.
Right now, Brom is very small because these signups have all happened in the last 1 or 2 quarters, and they're going live, right? So it's extremely small, but as we go along, it can be very significant in the next 3 to 4 years. Very, very significant.
Would you be able to quantify the significance?
Hard to put a dollar or a rupee number to it or a percentage, but suffice to say, we are seeing great reads, and the market TAM is very large, right? Anybody who has a branch, and NBFCs, etc., or retail chains, insurance companies, so everybody has this problem.
Take that point, Avinash. Thank you so much for joining in and giving us those insights into the business going ahead, and telling the people that you've gone ahead and bought 3 lakh shares as well. It will be very interesting to see whether financial performance and the stock price performance follows your actions as well. Currently, we have seen the stock move higher to the high point of trade after a big correction that we've seen over the last 1 month itself. With that, it's time to slip into a short break. And as we do that, here's some good news for all our viewers. India's business news leader is now just a click away. Hormaz will walk across just a couple of steps to look at the big phone that there is there, which is the CNBC-TV18's all-new app, where you get financial world updates at your fingertips, in-depth articles, financial world updates, and a lot of insights, all of them at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or what you can do is, the QR code that just comes up for you on the screen, you can scan that and get the app all on your fingertips. The pickup in some of the mid-cap names continues. We were talking about some F&O names and a lot of the largish broader market names, but look at some of these cash market stocks which have seen a big cut. Bazaar-style retail, one of those stocks which had halved from the top, is now seeing some buying at lower levels. It's up 16% in just the first hour of trade itself. So that stock comes up for you on the screen. The other one is Thomas Cook. Remember, all the travel-related themes are doing extremely well. So Thomas Cook has moved higher. RateGain is another one which works with the hospitality industry. That stock up around 8% as well. And when you're traveling, you take your suitcase along with you, right? Look at Safari Industries. That stock too is up around 6%. So specific themes are doing extremely well in today's trading session. The ones which had seen a bit of a drubbing. Sapphire, yes, but Safari Industries is the one that I'm talking about. With that, we'll wrap up on this edition of Chartbusters with the news that the mid-caps continue to do well, even though there is some supply coming in for the big caps led by the Nifty Bank. From Hormaz, me and the entire team, thank you for watching.